Well, Wall Street is still focused on the Fed. That's our top story today on the Wall Report. I'm your host, Greta Wall. The market is struggling to hold on to last week's big gains as more Fed officials speak. Atlanta Fed President Raphael Bostic speaking this morning at the National Association for Business Economics Conference, and he gave his thoughts on what the neutral level is for interest rates. Bostic said he believes 2.25% for the federal funds rate would be neutral, and the Fed's goal is to get there as quickly as possible. Now, reaching that level would require 6 more quarter-percent rate hikes this year and then 2 in 2023. That's 1 less than the Fed has forecast for next year. Now, Bostic is more dovish than some of his counterparts, saying uncertainty stemming from the war in Ukraine is at the front of his mind right now. Fed Chair Jerome Powell is now set to be speaking at the conference. He's likely to strike a slightly more hawkish tone than Bostic. Bostic is not a voting member of the Federal Open Market Committee this year. But Treasury yields are popping in today's session. The 10-year yield is up 9 basis points today to over 2.2%. And those rising yields are putting pressure on tech stocks, but energy stocks are rallying as oil prices rise on news that the European Union is considering a ban on Russian oil imports. West Texas Intermediate crude futures are up more than 5%, topping $110 per barrel today, with Brent crude futures meantime rising nearly 6% to over $114 per barrel. Now, banning Russian oil in Europe would put a major strain on other global oil suppliers. Over a quarter of the crude oil that's imported to the EU in 2021 did come from Russia. And nickel prices did plunge again today on the London Metal Exchange. The 3-month contract hit its new limit down level of 15% right at the open of trade, tumbling to $31,380 per metric ton. Now, nickel has been in a free fall since trading resumed last week after being halted on March 8th when prices more than doubled to over $100,000 per metric ton. Now, prices have been higher on the London Metal Exchange than they are on the Shanghai Futures Exchange. Reuters reported that difference has caused trading volume to be low, with few buyers willing to pay the higher price. Now, a look at some individual stocks as Boeing shares are dragging on the Dow today, falling more than 4% after a 737 crash in China. China's aviation authority confirming that plane, operated by China Eastern Airlines, did crash with 132 people on board. Officials say contact was lost with the flight over Wuzhou in the Guangxi Mountains. Now, the number of casualties and the cause of the crash is still unknown. The FAA and Boeing, though, are expected to assist Chinese regulators in their investigation. The plane that crashed was a 737-800, not a MAX. The MAX has been recertified in China, but has not yet returned to flight. Now, Alleghany shares are surging today, up more than 24% after Berkshire Hathaway announced it is buying the insurance company. Berkshire will buy the company for $11.6 billion, or $848.02 per share. Now, this is Warren Buffett's biggest acquisition since 2016, and it's an all-cash deal. Buffett said that Berkshire will be the perfect permanent home for Alleghany, calling it a company that he's closely observed for 60 years. And Allegany's CEO also praised the deal, calling it a, quote, terrific transaction for Alleghany's owners, businesses, customers, and employees. Alleghany will still operate independently following the acquisition. Kohl shares, meantime, are down just slightly today after the retailer did confirm it has received multiple buyout offers. Company confirming the interest in a press release, but did not say who those bidders are. Now, recent reports did say Hudson's Bay Company and private equity firm Sycamore are both interested in buying the department store chain. Kohls previously rejected an offer from Acacia Research at $64 per share, saying that price was too low. Kohl's board has hired bankers at Goldman Sachs to coordinate with the bidders in the current negotiations. Now, meantime, Goldman Sachs is now the first major U.S. bank to trade an over-the-counter crypto transaction. Goldman shares falling in today's session, but the bank did confirm it traded a Bitcoin-linked instrument known as a non-deliverable option with crypto bank Galaxy Digital, and helping them facilitate this. Now, that option is tied to Bitcoin's price, and it does pay out in cash. Galaxy's co-president said in an interview, quote, "This trade represents the first step that banks have taken to offer direct, customizable exposures to the crypto market on behalf of their clients." And in a statement, Goldman's Asia Pacific head of digital assets said, quote, "We are pleased to have executed our first cash-settled cryptocurrency options trade with Galaxy. This is an important development in our digital assets capabilities and for the broader evolution of the asset class." Now, he confirmed the bank is now envisioning the development of options markets that are tied to digital assets. So it looks like Goldman is all in on the future of crypto. Do you agree? Let me know what you think in the comments, and I'll see you all back here for the Wall Report tomorrow. Be sure to hit that subscribe button and the notifications bell before you go.